because of the hyperinflation, we're not going to realize that even if the price of something goes up 10%, you're still more poor than year prior because your money lost more than 10% in purchasing power.
Gustavo Brown asked, well, we already went through this topic, but I guess he wasn't here. Do you expect a pullback in the housing market because of the real estate crisis in China?
Unless we have a financial banking crisis, I'm gonna say no. Too many people wanna buy a house. It's not the issue that less people wanna buy. Right now they're saying next year the inflation rate or the appreciation rate of houses is not gonna be as aggressive as this year. This year in the Tampa market's 25%. Next year is supposed to be around 20 to 22%. Nationwide, it's supposed to go down roughly 5% compared to this year. The issue that I'm seeing, the factor that's not being communicated clearly, is it's not there's less people that want to buy houses now than were before. It's that the houses that people want to buy aren't available. The level, there's a massive amount of people that want to buy property that cannot buy property at the current prices. So they're still there ready to buy. If there was some type of pullback and there's more homes that were affordable to them, they're gonna swallow all that supply up. I mean, we have 3 million housing units short, and we're basically building, we're negative 300 every year on the quantity that's being built, meaning next year we'll have actually 3,300,000 housing units short. Following year, we're gonna have 3.6 million housing units short. It's only getting worse each year. So if we do have some type of issue in the market, all of those houses are gonna be absorbed very, very fast. So I don't see housing prices that go down hard. So I see 25% last year, right? I'm talking about my market, 25% in 2021. 2022, I'm gonna say it's probably gonna be around 20. 2023, let's just say it's 15%. 2024 is a questionable year. Are we gonna have the 2023-2024 year? Are we gonna have a 10% increase? Or are we gonna have a flat? Or are we gonna have a 10% drop? Those are three valid options on that time period. Because by that time period, most of the money that was been spent into the system is gonna be spent. If we don't have our financial situation fixed, we could have a pullback, but the pullback is not gonna cause an 08 style. And even if in 2023, 2024, we do have a 20% pullback. 2021 was 25% increase. 2022 was additional 20. 2023 was 15. 2024 is 10. So if you have a 20% pullback, you're still paying a higher price than 2 years prior. So yeah, you can wait, but 4 years from now, there's a very good likelihood that we are about 45% higher than we are today. Now you're gonna say, that's ridiculous, that's too much, and so on. But when you print 25% additional money, we increase the total amount of money in our system by 25%. That's gonna have a huge effect on the whole system. And every time the government makes money, right, they fabricate additional money. The banking system, when it goes through the system and then it goes to the banks, the bank is allowed to loan 7 to 10 times that amount of money in that account. So we didn't just create potentially 25% more money, right? We potentially created 7 to 10 times that amount. So we have to be very careful about the hyperinflation that could be coming. So again, the downside in the next 2, 3, 4 years, like this is what I think is gonna happen. Where next year, let's talk about the stock market. Let's just say the market's at, say, $37,000. At the end of the year, we could be at $37,000. We had ups and downs throughout the year, but you're still at $37,000 at the end of the year. And everyone's like, oh, we broke even, or we're up $1,000, or $38,000. In dollars, yes, it's the same. But if we look at it nominally means inflation adjusted. Nominally means, yeah, you have $37,000 in the beginning of the year, is $37,000, but that money can't buy as much as what it did the year prior. So you lost wealth, you lost purchase power, you're more poor. So I believe because of the hyperinflation, we're not going to realize that even if the price of something goes up 10%, you're still more poor than year prior because your money lost more than 10% in purchasing power. So I believe we're going to fall forward. We're going to fall sideways. We're not going to go down on pricing. It's because of the inflation. You're going to have more money. It's just the money can't buy anything. The cost of goods will be so high.
Proc9 Saxon asks, thoughts on buying another property in the state of California now or wait? I feel it's been crazy busy abnormally this time of year.
So this last half of the year has been pretty crazy because a lot of people are concerned about the tax implications of 2022. They don't know what Biden's going to do. So they're trying to make sure that they get their deals sold, that they make their moves this year because they don't know what holds for next year. People don't know if interest rates are going to go up, so they're trying to lock in lower interest rates. People don't know if taxes are going to go up, so that's going to cause a lot of people to not sell. So some people think, taxes are going to go up, it's going to cause an issue and crash the market. People think that interest rates are going to go up and it's going to cause an issue, it's going to crash the market. I actually think the opposite. And again, I think that's why a lot of the sales are happening this year, but let's follow through. If taxes go up on a real estate transaction, on a sale, if they get rid of the 1031 exchange, hypothetically, because people are afraid that might happen, what would end up happening is that people that own the real estate they do today will have very little reasoning to even sell. Because real estate investors, they invest in real estate because they don't have to pay a lot of taxes, or they can defer their taxes through a 1031 into the next deal. But if you've owned a property and you bought it at $1 million and now it's worth $5 million and you went from a long-term capital gains of 20% to a long-term capital gains of 40%, and you can't 1031 exchange, you basically removed any reason that they're going to want to sell. So it's going to have the people who own real estate hold it even harder, limiting the supply, causing prices to go up. Now you say interest rates. Now there's an inverse relationship. As interest rates go up, real estate prices normally go down. As interest rates go down, real estate prices normally go up. Now, if you've seen how many people got very low rates today, what's going to cause, even though increasing interest rates will have a negative effect to cause real estate prices to have a depression, because higher interest rates means larger mortgage. But on the other hand, if someone has a 3% or less interest rate loan, it's going to make it less desirable for them to sell their house at a lower price and then buy a new house at a higher interest rate. After running their calculations, seeing their new mortgage, seeing the new taxes, seeing all that new information, they're going to come to the decision that, okay, where I live today is a better payment than I will, say, if I downsized. My payment might even be higher because that's a higher interest rate. That's the taxes are going to be higher. All these other factors. So there is the two negative things that could happen to cause real estate prices to maybe go down are actually reasons also why it would actually keep the prices up as well.